Welcome guys, welcome to Larry Pesavento. A trader for 55 years and counting, Larry moved into finance after studying pharmacology in 1967. He has since written over 10 books in trading, much of it owed to his work in harmonics and Astro Cycles. After managing the commodities department of Drexel Burnham Lambert in Southern California from 1976 to 81, and thereafter a regular visitor to the Chicago Mercantile Exchange and the S&P currency pits, he has since gone on to train over 1,000 traders using his unique pattern recognition software. After 7 decades in the industry, it's true to say that Larry has seen it, smelt it, dealt it, and traded it. It comes as little surprise as Larry shares Ralph Elliott's birthday. A fantastic omen at birth, one might say. Larry, a privilege to have you here today. 55 years and counting. Is it true to say you've seen it all?
Well, I don't know if I've seen it all, but I've seen probably 99% of it. I haven't seen anything new in quite some time, but I'm sure that something will pop up. But, after all these years, the amazing thing, Robert, is I still love it. I was one of the lucky people to find my, vision in life when I was very young. And, I've been just blessed. I mean, I really have. It's not just the financial part's been okay, but the people that I've met, that's the real beauty of what I've been able to do. And we travel all over the world every year, my wife and I, meeting our friends, and that's the real beauty of doing what we've done. And it's been a lot of fun.
Well, so a lifestyle trader of sort now.
Yeah, well, I trade about 2 hours a day. I usually my most important hours of the day from about 6 in the morning Tucson time, which is 9 o'clock Eastern time, till about about 3.5 hours till about 11:30. I'm done early today because of this interview, but I was already done long before this happened. So that's what I try to do, and then the rest of the time, I'm doing a few other things, but it's pretty easy. I mean, it's you don't have to break your back, breaking bricks or picking up sod, fixing a lawn or something like that. So I've been very lucky.
Well, it sounds like you're in a very enviable position. But let's turn the clock back, Larry. What attracted you to trading? I mean, all the way back in 1967, you mentioned earlier that you started with the ticker tapes.
Well, actually, my first trade was in 1959. My grandfather's brother actually bought me 100 shares of a little stock called Elastic Stop Nut. I was a freshman in college, and I was living in Indiana, and I would go into the big bank where they had it was a Merrill Lynch office, Merrill Lynch, Pierce, Fenner, and Smith. I remember all the names that were on there. And I would go in acting like I was a really big shot with all the old doctors and the lawyers that were in there smoking their cigars and stuff. And I had my 100 shares of this Elastic Stop Nut. And basically what it was the plastic version of little nuts and bolts is what it was. And it was the beginning of plastics, actually. And the stock took off, and it tripled in price, and I was able to take my 100 shares and convert it into $900, of which I bought my first car. And then I would still go in there acting like I was owning stocks, but actually I didn't do much for the next couple of years because I was in school, getting my degrees. And then in 1964, after I finished pharmacy school, I started graduate school, and one of my professors in graduate school was a Yale mathematician, and I took a class in statistics from him, and he was a full-time trader. I mean, this guy was he was really a full-time trader, wheat, corn, beans, any of those things. And that's when I really started to get interested in it. And he had this idea that silver was going to go up quite a bit, and so that's basically how I started, was buying silver back in 64 and 65, and from then on it's been pretty much 24/7 for me. I've just been enjoying it very, very much.
Well, I bet, and it sounds like you're enjoying the fruits of it. But I mean, you started off with buy and hold, which is more kind of investment from the sounds of it. And I can see now from flipping through your 10 books that you're into harmonics. This obviously hasn't been from the very start. Tell me about your transition into harmonic trading.
Well, actually, what happened was, from 1965 through 1974, I couldn't do anything wrong. I mean, I was basically buying in an uptrend of everything because we were looking at inflation. And then in the early 70s, we had the Russian grain robbery in the United States, where Russia was buying all of our grains. That was pushing grains up. So I was pretty much a no-brainer. I was a very cocky young man and had a little bit too much confidence. And then in 1974, during a 6-week period, which turned out to be the crash of 1974, I lost I lost all of my money. I lived a really good lifestyle, and I'd put in a lot of money away, but all of my trading capital I had lost. I actually had a debit balance of $2,800 in the fourth week of October 1974, and I actually, after that was over, I didn't trade again for well over a year and a half. But remember, I had some mentors along the way. John Hill from Futures Truth was my dear friend. He's in his 90s now, still trading every day.
Brilliant.
He was one of my main mentors, and there were several others, Oscar McClure and a few other fellows along the way. And I'd met Larry Williams, back in the early 60s, and learned a lot from some of the stuff that he had done. So I had picked this up, but after I had lost all the money, I had went to the Investment Center bookstore, which was in Los Angeles, and this was the best bookstore in the world for old books, and the man that owned it happened to be a friend, and I told him, my situation, and he gave me the Gartley book. This was in 1970, but I had the book, but I didn't do anything with it until I'd lost my money. And then after I lost my money, then I went back to the book, and that's when I started to see these patterns, excuse me, to see these patterns unfold, and that's what was giving me, that's when I really started to understand cycles and patterns, and I got involved in a little bit of astrology stuff, and I am still involved in it with a little today. But that's how I really got, into the thing, because then in 1975, I quit my job at Eli Lilly. I was working for the pharmaceutical company for 10 years, and I decided to go into trading full time in 1975, and then I caught a monster move in soybeans, and from there, Drexel Burnham hired me, and I went to Beverly Hills and set up their commodity office for almost 6 years, and then I went to the Mercantile exchange in Chicago, where I traded as a floor trader in foreign currencies, treasury bills, and eventually the S&P 500. But the S&P 500 had no volatility or no volume. It was only trading at 104, 105. But later on, in 83, 84, it really started to explode. And then in 1985, I went to work for a commodity corporation in Princeton, New Jersey, and stayed with them for a couple of years. And then in 86, I went back to California, and I became a full-time trader again, and have been doing it, ever since. I haven't really done anything different along the way. I've just been very lucky to find what I wanted to do, and to have your passion in life. You're on a perpetual vacation, so it's been pretty good. I've been very, very lucky.
Well, that's a real triumph over adversity story of a difference. You were completely, gone for broke until you discovered that book on Gartley. Having made your millions, you then eroded your account, gave up. What advice would you give to traders who are in a similar position? Because you can be rest assured a number of people listening will have faced that.
Oh, absolutely. Yeah, just don't ever give up. If you really like this, it might take you a little longer than you might want to do it, but don't give it up, because there's no other business in the world like this. The ease of entry into the business is very simple. The problem is the educational cost, because there's no really places to go to learn the things that you really need to learn to understand how to trade. There's a lot of books. Thousands of books out there now. When I first started doing this, there were, probably 100 old classic books by the masters, but there were virtually no new books being written. And, now with the internet and everything, there's, literally thousands and thousands of books. When I started trading, Robert, there were only, I believe, 32 actively traded commodities at the time. And now with electronic trading and everything, someone told me that there are over 280,000 things that you can trade now electronically. I find that hard to believe, but I guess it's true. But there's so much out there with the ETFs and all the other stuff that's going on. You just have to pick what you like to do and then go in it. But don't ever give up. If you really want to do this, my favorite quote by Winston Churchill was, never give up, never give up, never give up. And if you'll do that, you will make it, because you'll eventually stop making the errors that the rookies make when they, first start to trade. They trade too often. They don't put a stop in. They put their stops too close. all of the things that cause them to lose. But after a while, you'll learn how to do it, and it's worth every minute of it, because there's no place in the world where you have an upside potential like this and a very limited downside potential. Like I mentioned, it's the opportunity cost of learning the educational part of this that's really expensive.
True, I can understand that, but I mean, I can completely relate to what you say about there being an absolute plethora of books, titles, courses out there online for people who want to get into trading, who don't know what they don't know. It can be very bewildering. Would it be fair to say that would the market be your best mentor long term?
Oh, no, no question about it. Yeah, the market's a great teacher because it does the same thing all the time. It doesn't do it every time, but it does the same thing all the time. And what I mean by that, it just repeats over and over and over again. And if you learn how to study this repetition, that tells you, what direction the market is usually getting ready to move, and that's your edge. And that's what pattern recognition is all about, is to determining that edge and how it relates to the patterns of low, high, low, high, low, high. And that's the real beauty of what pattern recognition tries to pick up for yourself.
Yeah, and pattern recognition is certainly a big one, and harmonics is a very big area. And we'll certainly talk a little bit more about harmonics in just a second. But I mean, when it comes to your trading, I mean, I know that you do look at Astro Cycles as well as Gartley's, and you coined the term butterflies. But I mean, how long do you typically let your trades run for?
Well, usually when I put a trade on, I have a long-term idea where I'm going to be in something like 3 or 4 weeks, and then I have the shorter-term version. But to keep myself busy and also to make some money, is I look for 2 or 3 trades during the day that are set up on either half-hour or hourly charts that I'm able to place day trades in, where I'm in them probably about 24 hours. And I do several of those trades every day, along with the 3 or 4, which are my weekly best trades. And those are the ones that, I hold, and I don't even watch them. I just put my stop in. I don't want to see what they're doing. I don't check them very often. If I get stopped out, the alert will go off and it'll show a flash of the trade, so I'll know that. But that's really what I try to do, and because the monitor is really not your friend. If you're looking at the monitor all day long, you're doing a big disservice to yourself, because it draws out every single inconsistency in your psychology that you could possibly imagine. And the reason for that is, if you're long something, you want prices to go up, and if prices are going down in your long, that's pain. And so our minds are programmed to not to like pain, and that's what happens is you start focusing on the prices of things instead of doing the right thing, and that's what gets people in trouble. So looking at that monitor is just not any good. And if you stop and think of it, no one really cares what you're doing. I mean, no one cares what Robert or Larry are doing. I mean, they really don't. So, why people look at it all the time, I don't know. But it's one of the biggest things that I have to work on with people, is to, train yourself to stop watching the monitor. If you want to watch the monitor, watch something that you're not trading. Like if you're trading gold today, go watch Amazon, how it's trading. You'll learn something from that, or Google, or crude oil,
Or
something
buy a
like
dog,
that. But
buy a cat, buy a pet,
well,
or something like that.
yes, Bitcoin. Look at Bitcoin, whatever that is. Just get your mind off of what your position is, and you'll do much better.
Yeah, it's a very big, it's an enormous sticking point for a lot of people when they're in their trade. They want to be proved right immediately, and I actually found in my formative years that I couldn't help but watch the screen whenever I was in a trade, and whether it went the right way or not, I found the whole process emotionally exhausting, because then you're emotionally attached to money or the outcome. If you've got an egotistical kind of like investment in the trade, say for example you've talked about it amongst a lot of your friends, of course you want it desperately to go right, and if it doesn't, then that's a hit to your ego as well as your back pocket.
You just described it to a T. Good job.
Why, thank you. I like to do my best, but it is a common sticking point, and I think it is human nature, quite frankly, and a lot of, as I'm sure you can vouch with your 7 decades in the market, it's quite counterintuitive psychology-wise.
Indeed it is.
So Would you say, I mean, there's a lot of misinformation out there when it comes to Fibonacci and harmonics online?
Oh my gosh, yes, it's it's just a tremendous amount because most people don't understand, the relationship between the Fibonacci sequence, which is part of a bigger classification in mathematics called sacred science. And if you take the ratios of sacred sciences, which are the ratios 1, 2, 3, 4, and 5, and take the reciprocals and the square roots of those numbers, that will pretty much tell you everything that's going to happen in the market. And the one thing I firmly believe, and I can prove it to anybody who wants to listen, is that what happens in the past will happen again in the future. So if you study the past, it will lead you to the path towards the future. And that's what pattern recognition, tries to do. And it's certainly not perfect, but it does a great job of telling you, what should be happening next. And of course, if it's not, then you either stand aside or reverse your opinion and go with the other, the other side of the trade. So it does repeat over and over again. It does it with probabilities that are unquestionably mathematically proven. This was done by Dr. Andrew Lowe at MIT. He wrote a book in 2002 called The Non-Random Walk Down Wall Street, where he basically repudiated Burton Malkiel's work that the market was random, and he did it with mathematical precision. And since that time, which was 15 years ago, that's why you're seeing charts all day long on CNBC, Financial Times, Bloomberg. I mean, that's why you're seeing all these charts, is because he proved that these charts do have a strong probability of repeating and do a good job at determining, where the future might lie.
It's like a murder mystery, isn't it? People's job.
Well, that's exactly right, and that would be that would be the good felony, the murder, right? That's for sure.
Like hunting for the trade, stalking it, trapping it, and then trading it, like a huntsman in the woods, huh? Now, Larry, you've seen a lot of technological change in your trading career, from the open outcry of the pits to the solitude of home. I remember watching a kind of documentary about some of the pit traders in Chicago who really struggled to adapt to electronic trading. Did you find that difficult as well?
Oh no, that was my reason for going to Chicago back in 1982, is because I knew these computers were coming. And that I didn't know anything about the internet, of course, but I knew the computers were coming, and we would be getting off of Quotron machines and Bunko Rainbow boards and going to, but desk computers, so that you could get your prices immediately, and you'd be able to follow them a lot easier and be able to draw the intraday charts and stuff. So that much I understood. What I wanted to know is, when I went to Chicago, is how fair it was when they were trading in Chicago with the pit traders and the brokers and all that stuff, and I found that it was incredibly fair. I mean, they do a great job at protecting your orders and your stops and stuff like that. So I knew that the certain Fibonacci numbers have a strong affinity to price, so that when a Fibonacci number would come up in T-bills or the Swiss franc or the Jenny Mays or something, or even gold, I would go into the pit and see if there were any other sides of the offer. In other words, if I could see people coming in to buy or sell, I would wait until they had filled their orders, and so there would be a little vacuum there, so that I knew that there would be very little risk at that point, because all those orders had been filled at the fib point where I was looking to sell or buy, taking the other side of it, and then I would be able to move. It was very crowded and loud at that time. I would stand aside, assuming that it was going to go through those numbers. But that was back in the early 80s. But that's why I went to Chicago, is to make sure that it was very, very fair. And it has been, it still is, and it just gets better and better for sure.
And quieter, I'd imagine, in those pits. I mean, rewind 30 years. If I started my trading career 30 years ago in the pits, I don't think I would have survived, quite frankly. I would have been with my earmuffs on, smoking a cigarette in the corner.
You'd be surprised. If you like it, you're going to survive. If you don't like it, you're not going to survive. That's the bottom line.
Well, I'm glad my birth in 1984 coincided turn 23 when I started trading. At home on a laptop computer seems far more enjoyable for me, quite frankly.
Sure, it is.
But you've seen it all, and your 10 books reflect this. Talking about books, actually, Larry, I mean, you've written a book, Trade What You See, and that really does echo what I say to many of my clients time and again: trade what you see, not what you think. Is it true to say you don't pay any attention whatsoever to the news or fundamentals?
Absolutely zero. I mean, zero. I mean, if there were a minus number, I would say it, but there isn't, so it's zero. I don't look at the fundamentals. I don't understand it, and I have a master's degree in business, and it still doesn't make any difference because, to me, the sum total of all the buying and selling is on that bar chart. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's what you really need to know, and what I try to do is incorporate that into a pattern that gives me the edge that I'm looking for. Prices have to be the most bullish at the top and the most bearish at the bottom, and only one person gets the exact high tick or the exact low tick, so don't concern yourself with that. You know, it's a business of making money, so try to find a place that gives you a low-risk entry where you can control your risk, and the risk is all you can control, because in the risk-reward equation, that's the only thing you can control. You'd never know how much you're going to make on a trade. You don't even know if the trade's even going to be profitable enough. What you have to do is to control the only thing you can control, and that's the risk. And if you can control that risk, you are going to be successful.
Sure, and I'd imagine like you can always rationalize it, that regardless of the news announcement, say for example you've got a positive reward to risk, if the news happens to be in your favor, then it will help perpetuate a winning trade and you make more than what you've risked, and if you're wrong, then at least you lose a small amount of risk. Would it be fair to say?
That's exactly the way to say it. You did a good job.
Well, thank you. I mean, that's kind of one of the philosophies that I have entertained since day dot. I mean, it's like flipping a coin, knowing that, okay, if it lands on heads, you make £300. If it lands on tails, you lose, say, 100. And if you've got positive reward to risk, then you'll be rewarded long term, quite frankly, unless it's a black swan event.
That's exactly right.
So you're not an indicator man, are you? I remember listening to one of your interviews with, I think it was with Etienne Crate, and you said quite staunchly that you do not use indicators. Why is this?
Yeah. Well, because they're lagging. They're lagging. The market indicators are based on what's happened in the past, and if you're going to do something, you want to know what you think the future is going to be, and that's what pattern recognition will try to do, is lead you to something, to a future event, and that's what you're trying to do. But all of the oscillators, MACD, percent R, stochastics, any of them, they're all, based on what's happened in the past, and you don't really need that. Basically, it's good to look at the past, but the past will lead you to the future, but you do that by extrapolating what the past has told you and then move it out into the future. And by the time you get a signal on these lagging indicators, the market's already moved, a great deal, from your entry point. So it's just hard for me to trade. I worked at Commodity Corporation for many years, and they looked at indicators, and they never found them to be any good, and I certainly haven't. I'm sure some people can do well with them, and I know that their trading plan is based on that and does work for them. So, God bless them. Keep doing what you're doing, because it's going to work. But for me, I'm not interested in it, because I'm interested in what I think is going to happen next, not what happened 8 periods ago or 200 periods ago with a 200-day moving average or something like that. One thing I remember one of my mentors telling me, a moving average is exactly what it says it is. It's moving and it's average. So you have to be a little above average to be successful here. So that's my opinion.
Well, I mean, for me, I use moving averages only to objectively confirm a trend, and that's it.
Sure.
I mean, quite frankly, a lot of indicators, I agree with your mindset that they lag, and quite frankly, don't tell us anything that price doesn't already, price being a leading indicator.
There's an easier way to determine trend than using a moving average. If you have higher bottoms, you're in an uptrend. If you have lower tops, you're in a downtrend. Just pick any time frame you want and look at that. If you have lower tops, whether it's a 5-minute chart, hourly chart, or whatever, if you have lower tops, you're in a downtrend. If you have higher bottoms, you're in an uptrend. And when someone asks you what the trend is, they must tell you what time frame you're looking at, because the time frame on something could be straight down, and yet long term it could be straight up. Google's a perfect example. Today it's down sharply because of earnings, but if you ask what the trend was today, it's down. But if you ask what the trend was over the last 9 years, it's been straight up. So you have to ask what that time frame is.
Yeah, looking for time frame correlation, huh? And
Yes.
cyclicity is a big one, and I always certainly look to. I know it sounds very simple when said, easier said than done, but buy dips and upward trends and sell rallies and downward trends. And I know that that is kind of trading 101, but it's amazing how many people get even that wrong.
Yes, that's true.
But I mean, you've been trading Gartley's for donkey's years, quite frankly. But I realised that you actually coined the term butterfly, which is another harmonic
Yes.
pattern.
Well,
Yeah.
the Gartley term also, I coined that too, because on page 222 of Gartley's book, I called it the Gartley 222 because it's on page 222 in his book, and he took 2 full pages to describe this pattern. And then through my association with Bryce Gilmore in Australia, he had a program called Wave Trader that I could see these patterns unfold mathematically, and I kept seeing this one pattern flash that looked like a butterfly, and that's basically a failed Gartley pattern is a butterfly, and that's how I coined that, the butterfly pattern along that. But no one even knew what the Gartley book was because it cost $1,500 in 1937. It was virtually impossible to find the book. There were only a few copies out there until the book was reprinted in 1985, I believe, by Billy and Nikki Jones out of Pomeroy, Washington. Billy was my accountant at Drexel, and he was looking for things to do, and I said, reproduce this book. And Gartley died in '69, and so he tracked down some of the heirs and got the permission, and he was able to reproduce the book. I think it runs about $150 now. It's 700 pages with some of the greatest charts you'll ever see, but that's how it all started.
Wow. So if there was a book, person, or resource that had a significant influence on your success, I think we could overwhelmingly say it was Gartley.
Hands down, number one, that's for sure.
Well, for those people looking for Gartley's book, at least it's not $1,700, and that back then I imagine that was a truckload of money.
It was the cost of 3 Ford automobiles, as a matter of fact, back in 1937.
Goodness, so highly coveted information back then. As quite frankly, I mean, it's available online, but nothing quite like the original, huh?
It's the same book. I mean, they reproduced the whole thing. It's exactly the same book.
Great, very interesting. Well, certainly for those people who want to give harmonics a closer look, I mean, it's a whole new world.
The book was actually a loose leaf binder. I don't know if you knew that or not, because back in '37 it was hard to get, books published, and since it was such an expensive book and so few people bought it, it was in a 3-ring loose leaf binder. That's how the original book came, and then later on, when Billy Jones produced it, they made it into a hardcover book. But that's how it started.
Okay, very interesting stuff, Larry. Well, I appreciate you're a busy man, so I won't take up too much more of your time.
No, I enjoy this. So, let's just go with the flow and see what happens.
Well, if we're going with the flow, then naturally we'll ask you, for those people who are listening, where can people find out more information about you, Larry, in terms of what you can offer them?
The easiest way to do it is to email me. It's Larry Pesavento at gmail.com. That's the easiest way to reach me. And then I have a website, which is www.larrypesavento.com. I also do a radio show each day from 9 o'clock till 10 o'clock in the morning Eastern Time, Monday through Friday. And you can hear that on the internet at www.TFNN, that's Tiger Financial News Network. And all you have to do is just click on the show, and you can come in and listen to me. And we have people call in from all over the world, and they ask questions, and we talk about some markets, and we look at some patterns. And it's an interesting way to start the day. It's stuff that I usually do, and we're just watching to see how the markets unfold.
On all time frames, would you say the 4-hourly, the daily, and the weekly? Or even
my favorite time frame to look at, Robert, is the 4-hour chart, because that allows me to look at 6 weeks of data. But then as I get ready to place a trade, I'll move down to a 60-minute chart, then down to a 30-minute chart to refine my entry point because of risk. I want to be sure that the amount of money I'm risking is spot on with what my trading plan is. And then I place the order and then let it rip and see what happens, because after that, I don't have any control over it.
Wow. Well, I'm pretty sure after listening to this, you'll have a surge of people coming to join you on that radio show.
Yeah, it'll be somewhere in the neighborhood of 1 or 2 at the most.
Excellent, Larry. Well, thank you so much for your time. It's been a pleasure talking to you.
Okay, Robert, thank you, and may the best of luck to you. If I ever get to the UK, I'll look you up, and maybe we'll have a little cup of tea or something.
Yeah, a cup of tea or even a beer. Whatever you like.
I don't drink anything, so a cup of tea would be okay.